Very good afternoon, morning, and evening around the world to you, ladies and gentlemen. Christopher Ludwig here, and welcome to the Automotive Logistics Livestream Hour and this special edition focusing on the Middle East and North Africa, an exciting, dynamic, and certainly challenging region for the automotive industry and supply chain, not least because of COVID, but many other reasons. And we're going to spend the next hour going in depth at some of the changes and inputs happening across the sector here and what it means for the future of the supply chain. I will be joined in shortly, or let's say in about 20 minutes, by our special guest, Suleiman Palek, who's head of purchasing and supply chain for General Motors in the Middle East and Africa region. He'll join me for a live Q&A and be taking your questions as well. So please do put them through to the chat put them through in the question features and we'll put them to him. Although before that, we're going to share some data. I'm going to share some forecast and analysis that we've been doing on it. So I'm really looking forward to Suleiman joining us in the next half an hour or so. But we're going to share some insight with you before we do that. What I want to do before going to our Q&A, as I mentioned, we've been doing some analysis here at Automotive from Ultima Media, which is the business intelligence division of automotive logistics and Ultima Media. Together with my colleagues, we lead that here. We've been doing a report and analysis specifically on this region, forecasting the next 10 years, looking at the impact of COVID, looking specifically at the supply chain. And what I want to do over the next 15, 20 minutes max is give you a bit of a preview of some of the work that we've been doing, some of the figures that we see, and some of the trends across the region. So it'll be quite an extensive report when it's available early next year. This slide deck, which I've shared with you, is actually a handout, so you can download that immediately. But I think there's a lot of interesting things to share, and it'll frame our discussion with Suleiman quite well. Just a very quick overview of what we're talking about when we talk about this region. It's obviously quite a divergent spanning area with a range of economic development, infrastructure, trading terms, whether the GCC, fairly oil-wealthy countries, a high-tech, highly developed society like Israel, the dynamics of Iran, and then lower income countries in North Africa and other parts of the Middle East. So, that in and of itself is clearly a challenge. This is not really a cohesive unit, even where we have more specific trading structures within it, like the GCC, as we'll discuss. It's not as such one entity, but nonetheless, we see or increasingly see a lot of opportunity in automotive and in trade and supply chains here. The top 10 markets make up about 90% of vehicle sales here, so it's fairly weighted to some of the larger markets, and Iran being the largest one there with GCC. And as we'll talk about later, there's a production more developing, especially in North Africa. Have seen hard hits from the COVID crisis, similar to other regions, about a 25% drop if we take the region as a whole. That varies somewhat by market, and given some of the dynamics we're going to talk about, we don't see a big recovery in 21 because of some demand that's been pulled forward. There's been some tax changes and other things, but we do see a more sustained recovery after that, which we'll be talking about. Similar story for production. Iran, again, with a specific scenario, we'll go into that. North Africa, Morocco especially, is the leading production region, and that is very closely tied to European markets and has been hit there. We do see some recovery and a range of potential growth scenarios, which we'll go through over the next decade. Kicking us off, I won't go through all this in detail, but here's some of the kind of overarching trends and challenges that this region particularly has been dealing with. If we take COVID, big variety in the medical responses and some of the restrictions put in, and how it's impacted, and now indeed in the second wave. We expect that impact to be felt well beyond this year and into next year, not least when we talk about impacts on oil prices and what that will mean for some markets. But as we'll talk about, it can also be an accelerator for other things. It is a region highly shaped by geopolitics and foreign relations, whether it's the sanctions on Iran, GCC and the breakdown relations with Qatar, and also some positives, of course, as well, whether it's Israel and United Arab Emirates normalizing some relations and trade and other things. So there's quite a lot of geopolitics clearly that go into it and really can dictate aspects of the market. We're seeing at this time more investment, more focus from regional governments in Middle East and North Africa to really push growth, and automotive and logistics are major focus areas of that in terms of investment, in terms of policies to stimulate demand and encourage local production. I think there's not been a time when we've seen as many coordinated aspects of this. COVID puts a challenge on that, but we do expect to see it have a positive impact. There are some a double-edged sword element of that too, with the Gulfization, Saudiization, etc. policies, which do focus on liberalizing economies, but at the same time, there's some protectionist elements, some restrictions that can impact on local businesses and create challenges as well. Free trade is not a given, but there are positive areas. If we look at places in North Africa, whether it's Morocco's agreements with Europe or Egypt's recent reduction in tariffs with Europe, Morocco, and Turkey. And on the other side, we have a GCC customs union that isn't really functioning fully in the way that it's probably intended to when we look at the automotive industry. And then we have other markets which are highly closed off, whether it's Iran or currently Algeria. So a lot of room for change and shift and impact there. The regional positioning of the market, of course, is highly connected globally and is well positioned to benefit from trade with both rising markets in China and Africa, as well as, of course, Europe and North America. Logistics is a big focus here. We have a big variety in infrastructure. We have very varying levels of development in service and customs, etc. But we are seeing some big investments in a way that we hadn't before in a lot of special economic zones, free trade zones, etc., which are developing, and it should help improve connectivity across the region. And although it's not a market we expect to lead in electrification, it is one which definitely has potential, which we're going to come on to. And indeed, there's push on some governments, not least in the UAE and Saudi Arabia, to transition to electrification faster. Quickly, just looking at a snapshot, the COVID crisis has hit the region fairly hard, or at least some of it. Iran, of course, has been the worst hit, and unfortunately the second wave is picking up there. Second wave picking up in places like Morocco, but has been relatively contained in other parts. And what's perhaps important to note is the medical response and restrictions varied to a certain extent. So if we look at the deaths, these were kept fairly low in GCC, in places like Saudi and in UAE. Perhaps experience with MERS earlier prompted a pretty rapid response, whereas Iran has struggled more, and the relative death rates in some of the lower income areas of North Africa, for example, and indeed markets like Iraq have been hard hit. Overall, we expect the second wave to certainly be felt this quarter and well into the first quarter of 21, ahead of any kind of wider recovery. However, there's quite a variety in where the restrictions have been applied. So Israel went quickly into a second lockdown in September and got its cases under control, whereas others have stayed a bit more open. Places like UAE, for example, opening tourism, and some numbers have risen with it, but there's more efforts to avoid further lockdowns there, but it will impact on automotive. Beyond COVID, the region has a lot of growth potential. There's a fairly low vehicle penetration rate if we compare it to other economies. Again, we talked about there's a big variety in income across the region, and we see that as well in the penetration rates, whether that's the difference between a Saudi or an Egypt there. And that obviously also covers quite a different range of products and vehicle types, and whether mid to low price vehicles in Egypt, Morocco, for example, versus the more premium and mid-priced range in the GCC. But we see this dynamic kind of help pushing towards growth later in the decade. There is a lot of pent-up demand in many parts of the region, which should kind of unlock post-COVID, combined with some government policies. So there's definitely upside growth on the sales side from our point of view. And just kind of looking at it as a snapshot, this is what we see kind of broadly happening over the next decade in the wake of COVID. So average annual GDP of 4.5% will help support a combined growth rate that will edge back towards 3.74 million by the end of the decade. Should note that this is a high that doesn't reach, this is still below previous peaks. It surpasses the pre-crisis, but earlier in 2014-15, driven by sort of higher oil prices, there were markets like Saudi and indeed Iran pre-sanctions or pre-renewal of sanctions, which had seen much higher levels. So we see the growth coming from a few different places, perhaps some aspects of North Africa, for example, as well as broader recovery in diversification in economies. So again, a mixed picture there, but overall a growth story. And the production is probably a bit more complex. Again, production is quite concentrated in this region between Iran and Morocco as the main sources. And of course, the situation in Iran is likely to depend quite significantly on its international trade and foreign relations. It's probably too early to say what the Biden administration will mean for Iran. In principle, it could mean some normalization, but obviously that will depend a lot on the domestic U.S. policies and whether or not how quickly that changes. But nonetheless, we see Iran recovering, but the degree to which it starts to recover in a wider sense with more foreign direct investment from European and global OEMs, we think will depend on those relations, and that's why we see quite a variety in just how much that will grow. Similar story for different reasons, however, in places like Morocco, which are tied to the European market, and that's a wider dependent some parts on recovery there, and again the degree to which other OEMs might invest. But nonetheless, production rise for the region overall. You could see in a more optimistic scenarios moving past 2.5 million if in the more optimistic scenarios for each of those markets. We'll come into some of them more specifically a bit later. Saudi Arabia, second largest market after Iran in the region. We do see some move back towards growth here, but it's been a mixed story in the short term. So we talked about it earlier. There were earlier peaks of 2014 when the market was 800,000+. That dropped by about half over a 3 or 4 year period. Started to see some recovery pre-COVID, and obviously things have taken a hard hit there. The Saudi response to COVID was quite strong pretty early on in terms of lockdown, so obviously saw some impacts there, but things did open up and start to recover somewhat later. However, there have been some structural changes, introduction of or rather trebling of a VAT this summer from 5% to 15%, and there was also the expected imposition of a trebling of the import tariffs for finished vehicles from 5 to 15%. All of that certainly weighed on sales or pulled some of it forward. We saw a bit of a bump in Q3 ahead of weighing on. It's a bit of a complex situation, and actually something we'll speak with General Motors about a bit later. It does seem that those tariffs can be exempted for now for automotive, but nonetheless the overall impact of VAT is a drag on demand, at least in the short term. But this is an economy and a government which is pushing economic globalization, economic diversification from oil. We know about obviously ending the ban on women drivers, for example. So lots of interesting dynamics that should help support growth in the longer term, but still a challenging scenario around diversification away from oil. So we see, if we look at the market a bit more specifically, after a bit of a tepid year in 21, working through some of those VAT impacts, for example, a more sustained recovery to pick up there, and indeed for eventually to surpass the previous highs earlier in the decade. So moving towards 930,000 by the end of the forecast window here. Just turning to the production, and again, these slides are available to you. You're welcome to download them. They're a handout right in your control panel here. We'll just move as quickly as we can through them. The production picture for Saudi Arabia, so it's very low scale production currently. There's a small Isuzu assembly plant, but the government has set some pretty ambitious targets as part of its economic diversification, wants to see 250,000+ vehicles produced a year. Not much sign of it materializing as yet. There was an agreement with SsangYong pre-COVID that was talked about that seems to have faded away, not least with SsangYong's own financial issues. There have been discussions with Toyota, no signs of those moving. Some interest from Chinese OEMs. So, you know, we don't, the limited supply base in Saudi, limited experience with this, but obviously there is money and support from the government. So in a more optimistic scenario, we do think one or two OEMs could make at least a small assembly investment in the region, perhaps also for trucks as well, which could see production of around 100,000. Although in a more realistic scenario, we expect fairly small scale in Saudi, 50,000 units a year. So not really expected to become a major center. However, there is prompts for investment, and that could change some of the outlook side. On the logistics front, Saudi is much more developed than some of its regional counterparts, although it's far beyond the United Arab Emirates, which is really the logistics powerhouse, if you like, of the region. But we're definitely seeing a lot more investment. And again, as part of the logistics is a key pillar of the Saudi Vision 2030. So we see big investments in several of the key ports, and creation of more special economic zones, tax benefits, etc., etc. Unlikely to maybe compete with Dubai or Abu Dhabi as a transshipment center, but nonetheless could become much more of an interesting import zone, and we already see some shifts, more vehicles coming from Asia, for example, which could drive it. Should there be more harmonization across GCC and some more FTA, that could also change the picture. Right now, it's a bit more complex than, it's quite complex at the moment. Turning to Morocco, this is not particularly a very big sales market, but we do see some room for growth, although likely constrained by a rising second wave in the short term. The market here is very tied to Europe, and most of the main brands here are European brands, or the French or German, etc. From either local production or a fair amount of imports. We see some reasonable growth over the next decade, again from relatively low levels compared to the other markets. But again, largely a growth story based on the low penetration rate and pent-up demand in Morocco. Much more significant in Morocco is its production. Pre-COVID, it had been on pace or probably surpassed South Africa as the largest production country in the region. Added around 400,000 at one point. There's just Renault, and that was before PSA opened a plant in Kenitra towards the end of 2019. About 90% of the production in Morocco goes to Europe, obviously, especially for Renault and PSA. Again, pre-COVID, there was Renault plans to expand in Casablanca, which was a joint venture plant that they took over full ownership of last year. And PSA doubled the plans to double capacity in Kenitra quite quickly after opening it. Moroccan government was expecting, pushing towards a target of 1 million per year. Big focus on localization, big focus on tier suppliers, many of whom were and are investing in Morocco. But of course, the COVID crisis, is hitting that. Obviously, the production being so closely tied to Europe, the export markets will drop, and Morocco obviously also experienced shutdowns with the rest of the world there. So, but we see again a couple of different possibilities here on a more realistic, arguably pessimistic basis. those million ambitions will get pushed out further. We already see Renault seeming less likely to invest in expand Casablanca so quickly, and whether PSA's immediate plans go as quickly as thought. They have said that they would double capacity as early as September to 200,000, and they've begun production of a small electric vehicle, the AMI there. So there is still plenty of upside, but with the crisis in Europe and other things, we do see some investment potentially constrained here. It looks a little more likely that the BYD investment previously announced is on hold, and in this scenario, production recovers beyond its pre-crisis, but doesn't have as much upside as previous, and probably reaches more like 450,000 at the end of the decade. However, more optimistically, we see production surpassing 600,000 by the end of the decade. It's a low-cost manufacturing base. It's highly integrated into European supply chains. So there's plenty of opportunity that Renault, PSA could shift more production out of Europe, for example, into Morocco. Could be some interest from other OEMs there, again, China or other. In this case, we see 600,000 by the end of the decade. So we do think there's plenty of upside potential here, but Morocco, again, quite closely tied to the European markets here. Logistically, Morocco is challenged. It has plenty of infrastructure issues. However, would sort of note that its automotive logistics operations are highly developed, especially on the international connections to Europe, with strong shipping and ferry links. Rail has been developed for the major OEM plants, where these special economic zones have been invested in. Lots of tier suppliers have come in. So the logistics kind of scores, if you like, for Morocco more broadly don't necessarily reflect how developed aspects of it are for automotive logistics, and that certainly is a boost for its supply chain in the future as well. Last market we want to take a quick snapshot of is Egypt before we go to Suleiman, and this is again a market, high population, 100 million, so huge potential there from a growth point of view. However, low income, still impacted by oil prices, etc. It's a market that has seen its hits. So we see upside potential, but from a relatively low level. Interesting dynamics here on the sales side. The trade agreements with Europe has led to decrease in, or rather reduction in vehicle tariffs as of last year to zero, which has supported vehicle imports there. Some negative impacts on production, and we see this is the forecast that we see, again, relatively strong growth, but from low levels, moving past previous peaks that we saw earlier in this decade. On the production side, it's pretty small scale kit assembly. There's lots of local manufacturers which have contracts with the likes of Chevrolet, Isuzu, etc., which we can talk about. But at the moment, the production has fallen quite low. There's limited local component supply base, and the FTAs suggest at the moment it's more beneficial to import. However, there's potential to see more investment from the existing OEMs, whether Hyundai, Nissan, Suzuki, GM, and other ones that can come in. We saw an announcement from Mercedes early last year about expanding production there, and of course the FTA suggests that Egypt could export vehicles too. However, we think it depends a lot on a local supply base for that growth. Logistics is pretty challenging in the region, despite obviously the Suez Canal there. But again, as in line with other regions, we're seeing a lot more investment in several ports, Sokna, for example, as well as a Ro-Ro facility at Port Said. So again, lots of potential development there. Just to sort of close on what some of the opportunities kind of more broadly in the region. Again, there is intrinsic demand. There's government to support that. There's a range of market potential here from Iraq to Morocco. But we do think a lot of it depends on stability, trade relations, geopolitics, etc., as well as development with oil. But definitely upside potential, and production mainly between Iran and Morocco, but again, other opportunities in other parts of the region, especially as the supply base develops. Big opportunities in trade, investments in special economic zones, free trade areas, ports, can see a lot more dynamism coming here, and that's something that we think will make room for investment in connectivity, sophisticated logistics, and 3PL services. So that's just a bit of a snapshot, if you like, of what we see kind of happening across the market. If you're interested in more, we'll have this report covering most of the major countries in the region, and more widely. You can register at Automotive Logistics as a member and keep up, and we'll make the report available to you when it's completed, or if you're interested in partnering with us at all, just get in touch. We're interested to hear from you. You can see the contact details there. Okay, thanks for that. Well, I think that sort of leads me now to bring on our first guest, or our special guest today. As I mentioned at the beginning of the show, Suleiman Palak is the head of purchasing and supply chain, responsible across the region for GM's supply chain purchasing and logistics for vehicles, for spare parts. Suleiman, thank you so much for taking the time to join us this afternoon.
Thank you for having me, Christopher. Appreciate it.
Yeah, our pleasure. So, Suleiman, I thought, why don't we start with a bit of a snapshot of GM supply chain and logistics sort of network in the Middle East and Africa region. As I talked about, it's a huge region. So can you just give us a sense of what some of the key facilities are and locations that you're overseeing?
Yeah, absolutely. So GM Middle East and North Africa operations is headquartered out of Dubai in the UAE. The company supports the markets across MENA, North Africa, and GCC and the Levant regions. It's a fairly what we call a highly logistical import-export kind of structure organization. We call it the national sales company in automotive terms. We operate through our dealer franchise boards, dealer network through the various countries in Saudi Arabia, in UAE, in Kuwait, and we have a production plant in Egypt. In terms of presence itself, our headquarters are in the UAE. We have the parts distribution center. It's one of the largest parts distribution center in the region. Through that, we transport the after-sales parts to the network over here in the region. We also have a plant in Egypt, the largest automotive production plant in Egypt, producing Chevrolet. We operate through our training center operations, upskilling our technicians as well as sales teams. Training centers are in each country in the region over here, as well as we do have the CVO, what we call company vehicle fleet operations. That's in a nutshell the presence. We import and source vehicles through predominantly North America. 75% of our volumes comes through North America, transported through our logistics partners, and the remaining 25% comes through China and Korea and the rest of the world.
Okay, great. Can you give us I mean, I outlined a little bit how COVID has impacted the region and obviously some aspects of the second wave now. Can you give us a sense of how General Motors has been coping in the supply chain kind of through the various phases and where we are now with the COVID crisis?
Yeah, it was as with any organization, as with most of the companies, it's been a challenging year. We did start off the year with a good start. Q1 was a solid sales improvement for our industry, including GM. As you know, the COVID began to really affect our region around March, beginning of April, and that's when it took a while for us to really understand the challenges that's coming in, and we had a very tough Q2. The markets went into lockdown. Dealer showrooms, service centers were all closed by government mandates, depending on the country. Some of the GCC countries took a very strong, very stringent COVID control measures, while some countries in North Africa were not. It all depended on the way the government made the restrictions. Overall, Q2 was a challenge. Our sales did drop by in line with the industry significantly. Q3, we managed to come back up. The markets began opening in the region over here. We started bringing in vehicles across the globe to the region. Sales started picking up. And Q4, we expect to have a better than expected forecast. Overall, Chris, as you pointed out in the beginning, there was a 25 to 30% drop in the industry, and that pretty much fairly accurate in how our sales also reflect in the region here, though slightly a bit better.
And what do you think, has this led to some structural changes in the way you manage your supply chain or logistics, either specific to the region or even connected to GM's global organization?
Yeah, it has brought about a profound shift in how we think about our supply chain operations. Globally, GM began operating what we call our GM command centers. It was based out of in North America, in Detroit, supporting global operations throughout the world. This command center was already available in GM, but it was really activated when the COVID situation happened. It brought about much more focus with our supply base. We had several conversations, discussions, engagement with our supplier partners and with their suppliers partners. We had to evaluate tier 1, tier 2, tier 3 suppliers as well to respond to the COVID situation in a more proactive and in a better way. The command center also supports the UAE, the region over here as well, when we look into bringing supplies from North America and the rest of the globe. That from a structural perspective, we also took strong measures to improve our cost base as a global company and as well as in the region over here in the Middle East. We moved to what we call a zero-based budgeting format. Essentially, all cost across the company was put on hold. We had to reevaluate how our fixed costs and our operating costs look like. It also led us to having discussions with our supplier partners to see how we can improve our cost base to be more effective and be more competitive in terms of our financial health for the year. What we see is we do see us continuing with what we call a post-COVID cost model, and all that involves around being more lean in terms of our operations, in terms of our volumes, and in terms of our business as a whole. An example to put in fact is at GM we transport a variety of vehicles from cars to sedans to SUVs. Some of these car lines are profitable, while some of these car lines are not so profitable. We had to really look at the profitability of each of our car lines, from SUVs to small mini cars to trucks, and we had to prioritize which of these product portfolios are optimum and which are loss-making. So we had to make those decisions very strategically, bearing in mind that profit and financial consideration could be a little bit more important than market share considerations in the region. So these are and we are bringing that view going forward in 2021 as well.
That's interesting. Obviously, I guess comes down to sort of inventory management, market lines, which products you're going to prioritize. Is that sort of led also perhaps to some shifts in the supply chain in terms of where you're sourcing vehicles? If you talk about maybe vehicles that can be produced and sold at better margins, perhaps that's sort of shifting that, and how is that impacting your supply chain?
Yeah, currently, as being a US automaker in the region over here, our strategic strengths and our plants are all located in North America, and the markets that import the vehicles are primarily from the US and Mexico and North America markets. 75% of our volumes was being produced and imported through North America, was 25% was from the rest of the regions. What COVID has taught us was we had to reevaluate where we source our vehicles from, and now we see a shift in utilizing more of our plants in Asia Pacific, in China, through our SGMW and SGM joint ventures. We looked into developing, producing vehicles that are faster to turn around in terms of the entire vehicle development process, and increase the imports from the Asia Pacific region, specifically China. So we see a sourcing of our vehicles moving primarily dependent from North America to now balanced against China and Asia Pacific. And what that means for our logistics partners is that we look into our capacity of volumes in terms of containers, in terms of ro-ros, vessels, and air freight, where the capacity and the volume, we see the business moving away from North America operations to some inbound from the Asia Pacific countries.
There's a fascinating shift there, actually, in terms of making more use of the Asian and specifically Chinese production base there. And you mentioned, obviously, the impacts for the logistics providers. Has it had a impact on your logistics cost base, or how you sort of plan the lead times, or dealing with the trade and customs procedures, for example?
It has. Usually, North America lead times are pretty much long than what we see from Asia Pacific. It also depends on the way the network is, the logistics network is set up. Generally, it is long from North America because the products that here are sold in North American vehicles for GM. Through the shifting of our model, we see a shorter lead time because the products are slightly different that we see from North America, as well as the way the network, the logistics transportation network is set up and works through the region or from China and Korea. So we see that shortened lead time as well. From a regulatory perspective, from customs, we did have to look at engage the customs in the UAE. We engaged with DP World Customs Group. In Saudi Arabia, we engaged with the Saudi authorities. Our customs group worked with them to see in advance, to understand the differences in the products and the regulatory needs that would bring from the vehicles that are, or from the products that we are bringing from Asia Pacific, or sourcing from the Asia Pacific. And we as well as the other automakers had to be ready in terms of setting up the customs process and customs network to be bringing the vehicles into the region.
I mean, complex, I'm sure, and challenging, but were quite interesting shifts there. And I guess it speaks a little bit to what perhaps some of what I was alluding to in the presentation around the divergent trade agreements and different kind of trade sort of rules. If we turn to the region a bit, let's maybe look at GCC, for example. You know, my understanding, of course, is that it is set out to be a customs union and moving towards a common market. Doesn't always necessarily function that way. Where, or are you seeing some challenges in trade terms and regulations within the region? Because clearly, I imagine you bring in vehicles, for example, to UAE and perhaps then distribute to others. So where are there some challenges, and where would you like to see some improvements?
Yeah, initially when the GCC, if you look at GCC, their vision is to have a union, a customs union, a single market, very similar to what we see in the EU and some of the North America trade agreement process. However, the practicality on the ground level is very different. Each country has a different customs tariff, a different customs process, a different customs approach, and country by country. For example, with the challenges with Qatar, that is now in a blockade situation, which is of course in the plans to improve. There are differences in the way each market operates from a operations perspective in the customs planning. It's very tough to bring in vehicles to one market and transport to the rest of the markets. So what we do is our import model is developed in such a way that each destination point or each market has its own trade lane with our shipping carriers that allow the customs and the net geopolitical structure in the region has made us, GM, as well as the other automakers in the region as well, to develop the market, develop their logistics model in such a way that it goes through each market to go through each customs rather than bringing in, consolidating in one region and distributing it from a vehicle perspective, at least. Some other challenges we see are rules in the way the imports are being done, the rules in the way certain tariffs are being implemented. Usually we see Saudi Arabia leading the decisions in terms of the market, followed by UAE and Oman, Kuwait, which follows through. North Africa is a totally different industry as a whole. We do have presence in Egypt, and primarily these markets, Christopher, as you pointed out, are vehicle manufacturing markets, and we have plants, as well as other automakers have plants over there to benefit for the domestic market rather than importing it through other countries and having complexities in import processes.
Yeah, absolutely. I mean, if I could just maybe on the Saudi point for a moment, because that's an interesting point in our own analysis, where the import tariffs increase or expected increase to 15%, the VAT increase. So we were sort of expecting a pretty big hit on that, but maybe if you can just give us a little bit of insight on what GM's experience has been. I mean, has that been delayed? Are you paying a higher tariff than before, along with VAT? And you know, maybe in terms of on the ground there, I'd be really interested in your insight.
Yeah, we anticipated the increase coming in June, though we were not expecting it. With the COVID situation, we thought the government would bring in improved measures or growth measures, but due to budget challenges in Saudi Arabia, the government decided to bring in the tariffs at 15%. When we got to know, the insight that I have is GM, across with other automakers, lobbied the government, Toyota, GM, Volkswagen, what we call the Middle East Automotive Council, lobbied the government to see if we can postpone the tariff rates. The interesting part is it impacted the customer demand. Customers thought that there's going to be significant rates going up, and there was an uptick in the vehicle sales across the industry, and that's what you pointed out as well in the presentation before. Following that, we do hear that there's going to be a postponement of these tariffs. We are still, our government relations team is in talks with the Saudi ministry to get more clarity. As of now, we have not got the 15% charge for the auto industry, but I do know that there are other industries that are getting prioritized and are paying this rate. So it's a very selective approach the government is taking, and it's not very clear.
So that reflects very much our understanding and insight there. So clearly that, I mean, perhaps good news if the auto industry can avoid those, but to a certain extent, as we here in the UK probably know better than anyone right now, clarity can be sometimes more rewarding than even the cost side of it. So certainly when it comes to planning the supply chain. So clearly there's hope and opportunity that we see some harmonization across the sector there to improve the trade. If we could turn, and now Egypt, you mentioned Egypt, and obviously I know that that's likely there is a plant for GM, and I'm sure a sort of local organization there. But in terms of what's happening again on the ground there, is the plant up and running again? How is it seeing volumes, and what sort of supply chain challenges do you see there?
The plant has been running throughout. There was a period of a week or two in June that we had to shut it down due to Egypt government's mandate for COVID. The plant, but in mostly the plant has been producing vehicles. industry has dropped in Egypt as well. It is primarily a very domestic, what we call low to mid-range products that are manufactured in the region, a very localized industry supply base that is located in Egypt, in Cairo, in Alexandria, in some of the other North Africa countries as well, to benefit from the low cost of manufacturing of the regions over there. We see for next year, we do forecast an uptick in the sales plan for Egypt, and part of this, one of the strategies that we are doing is we also leveraging the import model into Egypt as well from our Chinese joint ventures. Predominantly, Egypt has been a 95% local production, local sale operations for GM. We are trying to balance it out with imports from Asia Pacific plants of GM into the region over there. We have forecasted a growth as of this morning. I was reading a report within GM that we are looking at an 8.5% improvement in our business as a whole, and we'll have to see how that will work out as we move forward.
Absolutely. So what would, if I mapped out a bit in the beginning where we see growth and what that sort of looks like, but and you alluded to some of the ticks there for GM. If you're looking over the next horizon, like 3, 4, 5 years, and you're planning your supply chain, where are you anticipating or focusing on growth? I mean, you mentioned right at the beginning, and then this is a kind of wider GM point as well, around the focus on business profit and revenue, and perhaps making some key decisions that focus more on that as opposed to just pure volume. But in terms of where would you identify the opportunities, and this is also, I think, important for your supply base and clearly logistics service providers as well to identify along with you.
I think from a market perspective, we see slightly growth happening in the big key GCC markets in Saudi Arabia, in Kuwait, though UAE is still a little less in terms of growth. From North Africa, we do see growth in Egypt as well as in Morocco as well. What that means from a supply chain plan, we look at securing capacity for the region over here. Some of the challenges we learned from COVID was, and it impacted everyone, including our logistics partners, that the capacity got constrained due to no demand. Now the demand is picking up. We see that happening in China. We see that happening in some of the Asia Pacific markets. And albeit the COVID situation still lingers in the region here, we anticipate the demand to grow. And where we will be looking at is to focus on capacity, supplying us with vessel allocation for vehicles, container volumes to import and export parts. Of course, that would mean a very focused look on what the volume of the business is, and that involves a more closer engagement with the OEMs, with the automakers, to understand what the 2021, 22, 23 planning is. And we work with some of our partners to share well beforehand through our interface systems, through our EDIs, as well as through our regular channels on what the volume that we see for each market and what we see as what we would need as capacity from our partners. Overall, the business is we are here for the long term. We do see the trucks, the SUVs, specifically in the GCC markets, continuing to dominate in terms of sales, whilst we see a more crossover type of market in North Africa. There's a trend from moving from cars to crossovers and SUVs across the industry. So what that means is, it means a larger dimensional capacity in terms of how vehicles are being shipped out, or how vehicles are being freighted, or and the like.
That interesting point there, and I think a key one for providers. On that topic of the model side, what about, or where do you see opportunities and changes for electrification? Again, when we look at General Motors' global strategy, or certainly its North America strategy, but extending more globally, huge focus on electrification now. Some key products coming, some of which I can imagine being interesting to the Middle East as well. So maybe you can give us some insight on that side.
Yeah, some of the markets are in different stages in terms of electrification and to some extent autonomous technology as well. If you look at the, if I look at the whole entire MENA geography, the markets that we see are driving the electrification infrastructure is in the UAE, where we are. The government is investing and subsidizing electrical infrastructure, charging stations, networks, as well as promoting subsidies for importing electric vehicles to the region. Of course, the countries are still oil dependent, especially the GCC, though they do see a future where EV comes into play, especially when China and the larger markets across the globe in Europe and in North America and with California driving EV adoptions much faster. What that means is, before I go there, so Saudi Arabia is a bit behind. They are more traditional into internal combustion engines, whilst UAE is more advanced. And we see that lag between other markets as well. What that means for logistics partners and suppliers across the globe is that the type and the technical details of bringing the vehicles into the region. So electric vehicles require a certain way of allocation, way of transportation. They require certain charging within the vessels, within the airplanes, etc. So they have a different way of transportation in terms of their battery technology that is involved. Though it's not a significant investment, it is a change in the way they utilize their assets.
Absolutely. So, and particularly, we as you said, we're going to see some disparity, no doubt, in the region on that. But there is coming, and I know that GM obviously has some plans as well. I think to bring some electric vehicle products too. Or rather, I should ask, to clarify. I mean, there are some plans in the shortish term to see some electric products imported.
Yeah, we globally GM has invested in 27 billion in our electric vehicle portfolio. We recently announced in a global conference a few weeks back that we are investing from 20 billion to 27 billion. What that means is we are thinking of developing and bringing 30 or more electric vehicles by 2025. So these efforts are happening in the US. However, they have global implications. We are looking at bringing in some of the electric vehicles for testing in the market in the region over here. You may have seen the Hummer EV, the Cadillac Lyriq as well that we launched a few months back. We are thinking of, we do have plans to bring them here to validate the consumer demand for these products before we launch it at a global scale.
Excellent. So we have a couple minutes left. We've had a few audience questions, and one that I thought would also tie in. I was curious to get a sense from you of how you organize your logistics in the region. Do you work with LLPs? Do you build more individually on trade lanes or 3PLs? And there was an audience tie-on question to that, which I would also say is, in terms of the transportation network, are you using multimodal? Do you have rail lanes as well that you have in any parts of the region? Obviously you're shipping in deep sea, but do you also have short sea, for example? So just a bit more perhaps insight on how you work with logistics providers and some of the modes that you're using.
Yeah, sure. So we have tested both models, a larger LLP consolidated model as well as a more individualistic service provider model as well. 10 years or 15 years back when GM was in the region here, we worked through an LLP model. In the region, we had one supplier partner for overall inbound consolidation of parts to the region, management of our logistics centers in the region, and transportation throughout the region. However, we see as we move forward, and we saw the benefits and the growth of the economy and the demand over in the region over here, GM globally decided that we look into individualistic businesses and more focused partners. So now we work for inbound. We have one logistics partner to the region for parts. For outbound, we have another logistics partner. That allows us to look at the capability of each supplier in their skill sets and in their advantages, and allows us to operate in a more flexible way. Globally, in terms of vehicles into the region, we work with all the ocean carriers that we have in Glovis, Hogue, Autoliners, and we structure these contracts at a global level. In North America, they are executed out of North America. However, we are involved in the selection of these logistics carriers at a regional level, and we work with them on an individual basis. So both models we have tested out. We see an advantage of for our operations on a more individualistic level with each of the logistics service providers.
Excellent. And just the follow-up point to that is, in terms of your multimodal network, are you able to use rail, for example, at any parts of the region, or as well as short sea links? You mentioned early on that it's difficult to move parts or vehicles into one country and then out to another. So perhaps that makes that more difficult. But just are there rail or short sea being used?
Yeah, there are short sea being used and rail as well. Short sea is involved primarily for what we call transshipments that happen in the region over here. We bring in imports to the UAE and some markets to Lebanon, and some of these Levant countries. We use short sea feeder vessels, what we call it. They run through the Red Sea lane to some of the smaller ports. So short sea, we do it as well. Rail primarily is in Saudi Arabia. Key ports there are Jeddah and Dammam. Jeddah, though we utilize both ports, we use rail from Jeddah to Dammam and Riyadh as well. Since the country is large, the rail infrastructure is required in Saudi. However, primary use of transportation is through truck. Trucking is the primary use when we do intra-region transportation. For Egypt, North Africa, we do use short sea vessel carriers. We contract carriers to supply parts and some vehicles if we need to transport to that region through shipping lines.
Great. Well, I realize we're coming late on the hour here. There was another one or two audience questions. Maybe we can just take a last point here. The question was, what are some of the most exciting innovations and technology you see improving logistics, specifically for GM in the region that you're working in? So perhaps kind of that, along with other kind of the innovations that you're looking towards, would be a good place for us to finish.
Yeah, we are right now in the middle stages of a long-term strategic plan to bring visibility of our logistics network. In GM, we call it the GLIDE, or Global Logistics Integrated Design and Innovation approach, where this talks about a comprehensive overall view of our global network. It also brings in visibility, where we work with partners such as Google and other tech partners to understand where our vehicles are at any moment in time. Part of the GLIDE project is to have a visibility. For example, right now this year we implemented this in our region over here in Middle East, is that we are able to track our vehicles live at any moment in time and at any part of the world. And it's done through a similar technology as Google Maps, which is of course partnered through Google, and it allows us to see where our vessels are, where our trucks are, where each of our vehicles are globally. This was a long-term project. A lot of innovation happening in the region. Recently, we launched what we call an innovation hub initiative in GM Middle East. This innovation hub talks about, it brings together internal GM employees as well as our supplier partners to recommend ideas and innovative ways of doing business. And we partner with these supplier partners to implement some of these innovative ideas.
Excellent. Well, that all sounds very exciting, and actually points to what we certainly identify is that although there's lots of disparities of development of infrastructure and markets in this region, that it is primed for digital connectivity, for innovation, and I think the teams you're describing, the initiatives and the projects there certainly point to that potential. I think I appreciate all the time you've given us, Suleiman, and we've run a little bit over the hour here, but our audience was quite engaged and exciting, interested in what you had to say. So thank you for that. There are a few other questions here that I probably didn't have time to get to, but I'm happy to share some other questions with Suleiman to address them afterwards. And also there's a few for us for our research as well that we're happy to pick up too in terms of that. Just a reminder to everyone that the slides are available. If you on the section on your control panel, there's a handout arrow. If you click on that, you've got the PDF, and you can just take away that. We'll also make it available on our website as well. So before I close, Suleiman, thank you so much again for all that time and insight. It was really, really interesting for us, and great to get that perspective.
Thank you, Mustafa. Thank you for having me.
My pleasure. So thanks again, everyone, for joining us again this week. I wanted to just give you a quick reminder to register now to join for another live stream that we're holding next week in collaboration with our manufacturing division, Automotive Manufacturing Solutions, supporting production through automation and artificial intelligence, for example, talking about AI, cobots, a host of innovations that we see coming to the production line and to logistics centers. We'll be joined by BMW, Ford, and some tech specialists. So there's a link for you to register directly. Join us. That's next Thursday, the 17th, and that will be our last show for the year. But ahead of plenty of other stuff going on, and I hope you'll keep keeping up with us on Spotlight. Spotlight is our hub for live stream, digital content, virtual events, video, podcast, etc., both across our logistics and manufacturing portfolios, and that includes not only our program next week, but our North America virtual conference, February 2nd to 3rd, which the website is live there too. So do check that out. I hope that many of you can join us there and keep up with everything we're doing. Our report on the Middle East and North Africa, as I mentioned, is in progress, and we'll have an updates and completions by early next year. If you're interested, get in touch there. We can talk to you about partnering or how you can get a hold of it when it's available, and plenty more, as you can tell from this program. Lots of developments in the region we need to keep up with. So I hope you've enjoyed that. Hope you've picked up plenty from that. Thanks again to our team behind the scenes, organizing and supporting me and our guests kind of put these shows on. Get in touch if you have ideas and other topics you want to see covered. And in the meantime, keep joining us and keep your questions coming. Look forward to seeing you next week and into next year, and wishing everybody the best for the rest of a healthy 2020 and start to the new year. So thanks very much, everyone.